Welcome back, everyone. It's 6:42 and the Federal Reserve's latest meeting starts and wraps up today when the central bank is expected to finally announce a long-awaited cut in its key interest rates. So here to explain the impact we have for consumers is Mark Weinraub with Crain Chicago Business. Thanks so much for being here.
Thank you for having me.
Appreciate it. So let's talk a little bit about what's going on here. We've anticipated it for so long. What is the cut likely going to be?
Well, the big argument, if it's 25 basis points, which is your standard cut, or 50 basis points, which a lot of people are hoping for, since it's been 4 years since we've got a cut and rates have been steady for 2 years, or excuse me, more than 1 year now. And so it's a question of how big it's going to be. A lot of people I'm talking to are saying that's really not big enough. That won't bring lending costs down to where we were in 2021 when we really saw a lot of activity in the market and a lot of mergers and acquisitions and deals being made. So people are kind of saying, look, this is a great start, but I want to see more. When we get to 75 or 100 basis points lower than where we are, then maybe we'll really start to see activity pick up. That's probably not expected today. Again, 50 basis points would be a big cut from one meeting.
Yeah.
And then the next meeting is November, right after the election, and the one after that is December. So that's what a lot of people I've talked to are looking at. Let's look at the December meeting. Yes, this is great news. It's coming down. They're on the right track. But before we really start to see things happen, it might take another couple of months.
Yeah, a move in the right direction, but quite not as much as what people can effectively feel yet in some of the big purchases you would make.
Exactly.
Yeah.
Mortgage rates, we might see them come down a little, but again, those are also very high right now, as you know.
Yeah.
So any relief on that front will be very welcome, but I don't think it will really unleash the floodgates. And again, people won't be getting the kind of mortgages they were in during the pandemic when really it's tough to sell a house when your mortgage is that low.
Yeah.
Because you're buying a new one, your mortgage is going to be that much higher.
Yeah, it's like it either helps the buyer or it helps the seller.
Exactly.
One way or the other. Okay, so what do you think the future looks like, you know, if these rates continue to come down? And especially, we've talked so much about inflation over the last year. What do you expect in terms of that?
Well, that was exactly why they held rates this high for so long. They were worried about starting even more inflation than we had. It seems like they're pretty confident about that, and now there's more turn toward the labor market and concerns about that, and lowering an interest rate will help that. If companies can hire more, if they can borrow more, then they can hire more. And that's what we might start seeing. So that's one of the arguments that the Fed might be a little more aggressive and give us that 50 basis point cut because we have seen some bad labor numbers recently. We have seen some layoffs, and so they're hoping maybe they could stem the tide if the interest rates come down. But again, same thing. 25 basis points is one thing, 50 basis points is another, but we're really looking for 75 to 100 basis points to really feel a difference.
Is there anything else that could come out of this meeting or that we need to see from the Feds to really help out consumers who are struggling right now?
I don't think specifically from this meeting. Again, a lot of these numbers, 25 or 50 basis points, are priced into the market already. People always read the minutes pretty closely for what's coming next.
Yeah.
That's a lot of reading of the tea leaves. So I think people will be scrutinizing what the Fed exactly has to say and what that might forecast for November, December, and into 2025.
All right. Thank you so much for being here. We appreciate it.
Thanks for having me.
All right.